Hello listeners, and welcome to the Montel Weekly Podcast, bringing you energy matters in an informal setting. In today's pod, we return our attention to Europe's guarantees of origin and PPA markets. They are in many ways intrinsically linked. The prices of guarantees of origin are now high enough to be an important part of an investment decision for new renewables facilities, as well as for PPA deals, and are also an important little earner for green generators. What is the outlook for PPAs in Europe for the coming year, given some of the problems in the wind sector and some degree of regulatory uncertainty? Helping me, Richard Sverrisson, to talk about the main issues in these growing markets is Bruno Brunetti of S&P Global. A warm welcome to you, Bruno.
Thank you so much, Richard.
Let's start off by talking about guarantees of origin or GOs. Now, prices have been on quite a roller coaster ride, I think it would be fair to say, over the past sort of 12 to 18 months. Where are they trading now, and what can we expect over the next 6 months, maybe even beyond to 2024-25?
So right now, end of October, we are around €4 per megawatt hour. And so this price level is mirroring somewhat a market that is largely rebalanced, right? We have seen supply finally recovering, in particular because of normalizing hydro conditions. And at the same time, the demand, in particular from corporates, has been somewhat weaker than expectations. On hydro in particular, we have seen that the numbers are looking better. And at the end of July, the growth was fairly small, but we expect for the year overall a growth of 15% in terms of hydro issuance. So we are putting, in a recent report we issued, a growth of 55 terawatt hours for hydro issuance for 2023, which will bring total issuance at about 434 terawatt hours. At the same time, the cancellation trends have been generally weaker than we expected. We have seen, based on current data, we have seen only 1% growth so far this year versus 10% growth last year. So the short-term trends and drivers are not that positive after all for prices. We have seen economic activity slowing, power demand also weak overall. So I think in the near term, we can still see some market sentiment undermined by these fairly weak fundamental drivers. But medium term, so moving toward 2025 in particular, I think the €6 kind of mark is a fair valuation for GOs. And because there are still some bullish factors that are driving demand in particular. So it's a demand picture to make us believe that the €6 price is fair. And in particular, the commitments around the EU Corporate Sustainability Directive that are kicking in, and also the updated technical criteria for the RE100, they are creating a more structural support for GO demand.
So Bruno, tell me about some of those points you mentioned here, the technical criteria in the RE100. What does that mean? And also the Corporate Social Responsibility Directive. Talk us through those. What's happening there and how can they drive the GO price?
So from the standpoint of the RE100 updated technical criteria, we will see a shift from GOs that are issued from plants by plants older than 15 years to GOs that are issued by plants that were commissioned in recent years. So the shift of demand from that hydro to wind and so newer wind and solar plants, that will create extra demand in particular for those certificates. And then the EU Corporate Sustainability Directive, what it does is it effectively is enlarging the reporting mandates to a much larger number of companies. And the focus of the directive is in particular around promoting market-based instruments to show the commitment to renewable energy. So effectively, there is an increased push to purchase certificates and PPAs as well. And so that will create extra demand for GOs.
Absolutely. So, and the RE100 is, for those listeners who aren't aware of, that's basically the set of criteria for corporate purchases of renewable energies. And so this will drive demand from that sector, something that's been maybe a bit slower than expected, but do you think this will speed things up a bit from the corporate sectors?
Well, because the technical criteria kicks in 2024, and also when it comes to the corporate sustainability directive, the reporting is organized in phases. So the phases will come in the upcoming years. And so will lead to this extra demand for market instruments.
And so even though, to summarize what you said there, Bruno, we may slip back down in the short term down to maybe €3. In the longer term or medium term, at least, the outlook is far more bullish as more demand comes on, or as more, demand starts to pick up, rather. We've had this year one shock in particular to the geo market, and that was the export ban from Icelandic geos. Now, I know there was a decision due in October, and that's now expected in early November. What are your views around this and around the issues of double counting? Is this a big problem in the guarantees of origin market?
It's a good question. It does come down to corporate sustainability and to corporate commitments. Remember, we are in a voluntary market here. So it comes down to ethical responsibility of the corporates. And again, I would say the policy direction with the Corporate Sustainability Directive and also the work that the EU is doing with the green claims, there is a push for reporting of the advancements in terms of corporate decarbonization, which is more not only more granular, but there is more integrity. There's a push toward more integrity. So the policy framework has been already moving in that direction towards more granularity and more integrity. And so now it's up to the corporates to execute in that general direction and make sure that they comply with this broader policy framework. And so I think it comes down to the responsibility of the corporates. And so I think the market I see in a positive way, because that will support the demand for these instruments.
And they can expect more scrutiny potentially as well. It doesn't really have a regulator as such, does it, the geo market, or the Association of Issuing Bodies, the AIB, does act in a way as a regulator would.
But again, the overall policy framework and policy direction is toward more granularity in the report and higher integrity. So that will mean, again, more purchases of geos in view of showing those commitments.
And absolutely, I think that's been a call that I've heard very much or an urging of an increase in the integrity of the market, that the integrity has to be boosted. And when it comes to this double counting or double claiming, then that really needs to be looked at, doesn't it? I mean, you can say maybe it could emerge from Norway or Austria. Could these issues re-emerge as they did with the Icelandic case, do you think? Is there a danger that could crop up?
It's not in our kind of horizon in terms of our modeling work. Hasn't been done with that expectation and with those risks. I mean, again, as I said, the way the policy is moving is more toward making corporates more accountable for the actions that are making. And so I think that there would be that integrity in the market.
Absolutely. Moving forward, if we move on to a little bit of the relationship between GOs and PPAs, power purchase agreements, will the GO price become an ever increasingly important component for power purchase agreements?
Yeah, this is a great point. And in fact, the policy direction is also like establishing even more clearly this link. And in particular, the RED III directive has introduced somewhat this link. So
that's the Renewable Energy Directive, the latest version of the Renewable Energies Directive.
Yeah. So, and in a way, I mean, PPAs are being signed to some degree also to cover the volatility, the price volatility as a price hedge. So in a way, in the past, that volatility was more on the power side, the power price side. But I think off-takers, corporates are realizing that there is a volatility, increased volatility also on the geo side. So in a way, the PPA will provide this stability in the procurement cost, say that rely on buying a certificate in the current year and the following year. But it's also interesting the perspective from the renewable developers, because effectively the geo, as you said at the beginning of our conversation, the geo is increasingly seen as an important revenue stream. And that's particularly the case as we move forward, because power prices, and in particular the capture prices, renewable capture prices, will be moving lower. And so geos will account for an even more important portion of the revenues, of the merchant revenues for renewable developers. And so the case of the geo, again, will be a more important part of the PPA itself.
And do you think, as the geo price rises, does that also improve the business case for PPAs?
Yeah, absolutely. And again, at the moment we're looking at a geo price that accounts in the, I would say 5% of the overall wholesale revenues. But we are thinking that in the next few years that role would become larger, and we're putting that in the 10-20% order of magnitude. So say for a market like Germany, for instance, the geo would represent about 10 to 20% of the capture price. So that becomes really meaningful and important to keep in mind as a value as you build a plant and as you sign a PPA.
Absolutely. So it becomes very intrinsically linked, as I said in the intro there. But we're recording this in London, Bruno, where you're based. And the relationship between UK guarantees of origin, is it REGOs, and the EU guarantees of origin has been a bit fraught. And do you think, is there an indication or expectation that the UK will eventually start to import EU geos again at some point? Or has that avenue been firmly shut?
No indication so far. This has been it's been very bullish for the UK REGOs. And there have been two elements here to keep in mind. One is, as you say, the phase out of the geo imports, which has been a big element of driver of tightening of the REGO market. But then at the same time, also, this has been a year with poor wind generation in the UK. So supply itself, domestic supply, hasn't been very large. Has been pretty weak, actually. And so this has created this extremely bullish market environment, which clearly is creating some pressure to make changes. But it doesn't look like anything might change, at least before the elections. So we may have to wait until the elections. I would say perhaps the only thing that we could expect, the UK REGO market will be extremely driven by the domestic demand and supply dynamics. And we know the supply, though, is increasing because more wind is coming to the market. So it will depend. The price will essentially depend largely on how much wind there will be there and to what degree the demand will be growing.
Where's the demand in the UK? Where could it grow?
Well, it has been strong in the past few years, but at the moment, the market has lost its anchor. So, there are questions around how much demand can grow at these levels, at these price levels.
There's also a big discussion around hourly matching or annual matching, monthly. What's your view here, Bruno? Is it hourly matching or 24/7 matching? Is that realistic?
So there is a push toward hourly certificates. And the discussion during the RED III directive and finally the text has some kind of high-level indications that there seem to be a move toward this direction. I would say there's some clear there's a clear push from data-centric industries like the tech industry. Also because they have been already quite ambitious in their decarbonization targets. They're already quite advanced in terms of their journey. And so they might be ready to move in that direction. I would say also the clean hydrogen industry would be an industry that would be interested to kind of have this additional certificate, this additional market instrument. Some concerns have been raised by other market participants that I've heard, in particular smaller players. And the concerns are around the fact that, let's face it, the certificate, the geo certificate, is a pretty simple way to show a commitment, right? So the hourly matching, the introduction of hourly certificates might make things complicated, complex for those players where the certificates is still kind of a fairly simple way to make those commitments.
And could increase costs as well.
Could increase in costs. And also one of the concerns that we heard is around liquidity. And perhaps some of the concerns are there around the fact that some of the liquidity constraints could be emerging under this with the introduction of this new instrument.
Because the aim is really to have these players in the market, not try and put up barriers for them to enter the market. But do you think hourly matching would favour plants with more stable loads, such as nuclear?
So it does help technologies that they have a more stable profile, or that are less it would help plants we have a more stable profile, and we certainly wouldn't help solar that has that very distinct profile where generation happens all at the same time. Certain technologies might be benefited from introduction of this instrument.
Absolutely. So I'd like to move on to discuss a few issues around the power purchase agreements as well with you, Bruno. How much capacity could we see signed next year, given this year's record high?
Good question. I don't have a number in mind. It is true that we have seen this year strength in the numbers, but at the same time, also the third quarter numbers were looking a little bit weaker. So there's been a slowing already. Okay. I would say, though, that there are three elements, though, that make me think that we will continue to see growth. And we have seen these elements already emerging this year. Number one, smaller corporates have started to emerge. So smaller deals, we are seeing also smaller size deals that show more participation. And we know that the policy direction is toward this more participation from smaller market participants. Then a second element is the role of the utilities. We have seen utilities coming back. In 2022, the utilities were pretty much absent. All the market was corporate. Whereas in 2023, we have started to see utilities coming back as signing PPAs. So
in any markets in particular, Bruno? Or?
Well, we have seen, for instance, lately, just came out, like, for instance, Spain itself, some utilities were seen purchasing, signing PPAs. Then the third element is we have seen also some very large deals as well from players that we heard that are looking to source electrolyzers for clean hydrogen production. So these three elements are kind of making me think that we will see still strength in the years to come because they are there to stay.
You mentioned Spain. Are there any other hotspots in terms of growth?
Well, the Nordic market we have seen, and Germany is an interesting market, although we're hearing supply availability, PPA availabilities being relatively constrained, and then also other markets in Eastern Europe, Southeastern Europe also coming as an interest.
And how have sort of regulatory interventions influenced the PPA market? In particular, I'm thinking of the power price caps. The way it looks, they will come to an end next year, maybe April, June, maybe even some countries will extend them even further. What kind of an impact have they had on the PPA market and the in getting companies to sign these kinds of deals?
I haven't seen really very strong evidence in terms of an impact. But I must say at the same time, I haven't been myself focused on those regulatory elements. Although I have to say, I've been focused a lot on the pricing side of the PPAs, and there are some elements there that could have created some kind of bearishness in the market. And in particular, it's for solar. And we have seen this year the number of negatively priced hours increasing quite substantially, pretty much across markets. And it's not only the negatively priced hours, but also the very low settlements. So that is creating some concerns around pay-as-produced solar in particular, because, it's clear that cannibalization risks are there and will get only worse. So I think that concern around the cannibalization risk is something that it might be kind of creating some, can push some people away from signing, especially the pay-as-produced contracts, because it's more difficult to price given that you know that your technology, your plant will be producing those hours that are clearly, it's clear that they're kind of going to be priced at very low levels. And I mean, very hard to forecast those hours.
Absolutely. I mean, you mentioned negative prices. That's been a feature of certain markets, in particular in the Netherlands, where you've seen a massive rollout of solar, which has resulted in these kind of negative prices and curtailments as well of solar production, as well as, a saturation in some markets like Portugal. Is that kind of holding investments back, do you think, Bruno?
It's holding some demand back. And we're hearing demand for PPAs, and we're hearing that that in particular that there is some the people are a little bit more careful with solar PPAs, in particular the pay-as-produced solar PPAs, and in particular it's around those issues that we discuss. I mean, the hourly prices being low in a growing number of instances, and also the curtailment risks that are more pronounced for solar. But I'm thinking that for wind, the market participants will stay more, will be more inclined to sign. So the demand for those wind PPAs is there to stay, and I would say even increasing. And we do think that the cannibalization risks are much less pronounced for onshore wind than for solar.
But I mean, offshore wind is also facing severe issues, isn't it? I mean, you with the inflation, rising costs, a lack of auctions, etc. I mean, that's also maybe slowing down demand for such deals.
Yeah, offshore is also an area of concern. But I mean, I would say at the moment it's more the building of those plants that has been more of an area of concern.
One way of dealing with these problems would be to have a hybrid PPA. So you have solar and wind plus some storage facilities so that you can, store the excess power. Is this also something that you see becoming more important, that these kind of agreements will be signed more and more in the coming years?
Yeah, and we have already started seeing these deals. We have started to see deals, solar PV plus storage. Not many, a couple this year and a few also in the past. But we have seen a little bit more attention around those hybrid deals, in particular coupling wind and solar, and with storage, with or without storage. And again, there the idea is to commit to a shape, to a certain profile, and to some degree take away some of those risks around the producing certain specific hours. So I do think that there will be increased demand, and the market would be shifting more toward hybrid deals.
And especially in those countries where you see that kind of saturation of solar and wind. Are there any other hot trends that you see kind of emerging maybe, or that if you can ask you for your crystal ball there, Bruno, in the coming years?
Good question. Already we covered a lot of ground, right? So I think the shift that we are seeing is, again, I want to emphasize that wholesale revenues, in particular from the power side, will not be enough to cover all the cost for renewable development. So the shift is toward adding and stacking more revenue streams. And so the certificate is an important part of an increasingly important part of this exercise of stacking the revenues.
And that's quite a flip or quite a turnaround from what we've seen in the last sort of 5 to 10 years, isn't it? Where 6, 7 years ago, the guarantee of origin price was peanuts basically, so 5 to 10 euro cents. So that's quite a change. Yeah. Bruno, thank you very much for being a guest on the Montel Weekly Podcast.
Absolutely, thank you for having me, and hello to everyone.